Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week. It's a weekly stock market analysis show where we look at what happened in the market during the last week and how we can plan for a better trade for the next weekend. Remember, this is for March 14th, Monday 2022, the week starting from there. So let's get into and see what we can learn from last week's action. Right. So this is the weekly chart that you see on the Nifty and the Bank Nifty. So Nifty, you can see that's a wide range bullish candle, right? It is a bounce up after making a new low, swing low. Same with Bank Nifty also, right? You can see that in the weekly charts, it has made a new swing low, and you can see a bounce and a wide range bullish candle that is formed, right? High volatile because the kind of movement that happened in 1 week was tremendous. And daily, this is what you see, right? So you can see that V-shaped move that happened, right? It went to the bottom, slipped to the bottom, and then bounced up, right? Slipped to the bottom and bounced up. So last candle, if you see, it's not able to cross the previous candle's high, but it is a gap up that happened from the previous candle. This is also a gap up that happened from the previous candle, but it could not climb over the previous candle's low, right? So also you can see that this is also at a support zone, where it has taken the support of a previous resistance on both indices. So as usual, there is a probability of a bounce that happens. So let's just wrap up and see what Nifty. It's 387.2.3%, a decent weekly up move that happened. And remember that this is after it has made a low of 3.5%. So it dipped 3.5% and then climbed 2.5% on the previous close. So it is, right? And ended up with a wide range bullish candle, right? And you can also note that this is resisting below the weekly moving average, 50 weeks moving average, which is resisting below that. And as we had been seeing, it's a double top M pattern that is visible, and we are at the neckline. We almost hit near to the neckline before bouncing up 5900, and that seems to be a good support. That is broken, that is where we have to be alert. And the CIP bounce potential is there because we are at a support zone, which was a previous resistance zone. So that is always a person. So this double top and pattern is seen at 34% level at the Bank Nifty neckline, and also CIP bounce also exists in the Bank Nifty also. The Bank Nifty, it was kind of flat, only just 0.4%. That's 137 points from the previous week what happened. But that also, as you can see, had made a big 7% dip before moving up. This has made 3.5% dip before making it 2.5%. But in the case of Bank Nifty, it was very big dip, and that's the reason why it could. It forms. So the deeper the lows that is made, the more time takes to climb back, right? So it fell, because people go bearish the moment we have such positions get squared off and all this happens, right? And but in spite of that, it managed to close green, and remember that it is also resisting at the 50-week moving average. Daily candle also we had seen, you can see that it is a close flat that happens 0.2% in both Nifty, both indices, Nifty and the Bank Nifty. There's a flat close when compared to the previous close, right? So basically there is a window gap, right? On the daily candles you can see that there is a big gap that is there. And here also there is a big gap that is not closed. So that is where the resistance is going to come, right? So that's a 300-point range gap. If you look at the daily candle, it will be visible. So we have closed one of the gaps below, right? And now the next big gap is this gap, right? Which is starting from the 17,000 to 16,800. That's on Nifty. And Bank Nifty also you have a gap. You will be seeing that in the next slides for that gap. So actually you can see it here. See, this is the gap, and it's a window gap. So from here it had dropped down, and every time it attempts to go there, it faced resistance. So 1, 2, 3, 4, 5 times it has 4 or 5 times it has met with the resistance in this gap. Gaps are very powerful, as I say. So unless and until this gap is cleared and we climb over 17,000, yes, same here. And remember that we had closed the gap below. right? And we had formed another gap while trying to take over the previous candles. So that would act as a support. Similarly, you can see that Bank Nifty also has formed a new gap when it was moving upside, and that's where it has taken the support. And Bank Nifty also is a smaller gap, 600 point gap. So that is where we are now. All the bands is showing slightly different story. So there is high volatility. The distance between the bands, if you see, upside and downside is fine. So volatility would be there on the Nifty and the Bank Nifty both. But and also this, you can see that the breakdown has happened on the price in the lower band. So it's clear bearishness and still below the moving average 20. That's clear bearishness. But one thing to notice, there is a contraction of the lower band that has happened. That means it has taken a pause on the down move temporarily on the Nifty and the Bank Nifty also. So the contraction has begun. Now this contraction may come into a skews over a period of time. But as of now, there is a pause in the downfall is what we can see at least. But bearishness is clearly what short-term Bollinger Bands are indicating on both the indices. Now look at the support and resistance levels here. So 16350, 16450, Fibonacci 50 is the current good support that you can see. Downside you have 16200 for support, previous swing low, and then you have 15850, 15950, Fibonacci 61. It's actually 5900. So that zone is going to be very good. That's also a swing low, and if that is gone, then it's come to 15500 and 15650, 15350, 15450, that levels, right? And this is on the upside. Yeah, so right now 16550, 16550 where the market is already conquered, but whether it will manage to climb above that, we don't know. So that's more kind of a resistance actually. Now if that is maintained the next day, then the resistance above would be 16700 to 16750. Above that we have 16800 to 16900, which is 1938. Above that we have 17,000 and 17,050. All these are in the mid of a window gap, and that entire region is very tough to unless it is really bulls are in charge, it may be difficult to take out this. But if that is taken out, then we have broken out from the downtrending channel also, right? We have broken the lower low lower high pattern also. We have taken out the window gap also. That would be some real bullishness that will come, right? There could be a chance that it can consolidate here for a long time. There could be a chance that it can again fall back and retest and make, or again fall back and make another new low. All this is possible, but there is also a potential there. The bulls take charge and then move up and break out this gap. Bank Nifty also similar case. You can see that major support would be 34,350 to 34,750 level, where it is right now holding. If that support is retained, then you have the resistance at 35,000, 35,300, which is a Fibonacci 50. And then above that you have 35,600, 35,900, which is resistance, and above that we have the Fibonacci 38 retracement level resistance at 36,600, 36,300, 36,800 levels, and above that you have 36,900, 37,100, and then 37,500 Fibonacci 23 also is a good resistance. That is exactly where the gap that is there, the previous gap for the Bank Nifty, gets closed. So anything above 35,500 Fibonacci 23 would mean real bullish breakout. Right, and so that's the resistance support levels. Downside we had not talked about, right? So downside, if this major support of 33,600, 34,100, Fibonacci 61 retracement, that's a major support, that's broken, then you have 32,400 and 32,800 level, then you come to the 32,000 levels, right? So that's the resistance support levels for Bank Nifty. Now moving on to the momentum trend analysis, you can see that Nifty is recovered from the bearishness momentum, and then down is the sideways momentum. On the short term, that's a daily candles, and sideways is also seen on the medium term. One very positive bullish thing that seen in the chart is that it is bouncing from the RSI 60 support. You can see that, right? So the momentum is on the medium term. This charts that you see is on the daily term. So momentum is actually bouncing from upwards after taking a RSI 40 support. So that is very positive, that bounce up, and overall it is turned sideways. Things have turned sideways. Bollinger Bands, like what it is indicating on the short term, right? There is a shift from bearishness to the sideways momentum. Bank Nifty, in the case of sideways momentum, also has gone into the sideways from the various zones. Medium term also is sideways, and that also has taken the RSI 40 support. So the medium term momentum taking RSI support, right? And as I it would have been better if it would have been really bullish if the moment had taken a support at 40 in the medium term, and the short term if it had taken a support on the 60. But that is not the case. It is heading towards 60. So anyway, it is very momentum is indicating that there is scope for further bullishness. Now also you can see that there is a momentum reverse divergence, not reverse, momentum bullish divergences that you can see where the price is moving down and the momentum is moving down. So that is already in progress and it has been working well, and then it almost hit the target, but there is some more scope left. No, because the target would be 16,900 that range, no 16,800, that's all. So it is still work in progress, you can say, right? Almost met the target. So that's what divergence. Now the divergence, there is a scope for a momentum range shift in the bank nifty, right? If it is taking a bounce from this 40 support and climbing up, then that is a really bullish momentum indication that you can see, because it has shifted completely from the sideways momentum to this, from the bearish momentum into the sideways, and taken a support at RSI and then climbed back. So that is known as a range shift. Similarly in the bank nifty also, if it is coming down and taking support at a 40, it's known as a range shift concept. Right? So that is also really bullish. So momentum is bullish in favor of further up move, basically, you can say. Even if it is not bullishness, that is in sideways is the movement, but it could head to the bullishness is what momentum is. Trends, you can see that it is, what is trend indicators are showing. So right, so trend indicator, you can see that it is in the bearish zones, right? It is still in the bearish zones on the short term on both the indices, because you can see that the red DMI negative is what is dominating, and you can also see that this is a weekly trend indicator, what is put here. So in the weekly, the bearishness is increasing because the green line, which is indicating the strength of the bearishness, is moving up. So the bearishness is increasing on the medium term, but in the daily trend indicator ADX, you can see that it is still in the bearish zone, but the trend is decreasing. So that is what is happening in Nifty as well as Bank Nifty. So all our trend is bearish on the short term and the mirror. The trend does not change. Momentum is picking up, showing indications of moving up. Momentum has moved to sideways, fine, but trend is still bearish. But there is a less, less strength in that in the short term, and made rising strength, increasing strength. So something to be worried about a little bit, right? The trend will eventually change, but as of now, the price action is saying that it is not. And coming to the volatility in the opportunities analysis, volatility is cooled off, right? It was a big surge that happened, right? Around 50% from the downside, if you look at from the 20 levels, from 23 levels. This big surge that happened, but it has been cooling off last week. 9% of cool off has happened, and it does settle at 25.34, right? And 25 is again high volatility only, right? So you have to be cautious on that, especially if you're trading options, instruments like that, right? Now, open interest data, on the futures, it is showing that open interest data is long built up on both indices, right? Because it was a dip and a bounce. So long built up is what you see in the Nifty and the Bank Nifty, also the futures contracts, and option levels for the max open interest of calls and puts can be seen in the next slide. That's for the expiry of March 17th weekly expiry. So put call ratio is 0.74 and 0.64. It's not bullish enough, but it is heading towards bullish, as we can say. So this is the levels you can see. So this is only for Friday. This weekly expiry for the March 17th. Trading has happened only for one day, so it will be more clear on the Monday. As of now, the levels are 16,000 and 70,500. Right, 1,500 ranges for the put writers and the call writers are seeing, and the second level of maximum put and call writing is seen as 15,000 and 17,000. So these levels of 16 and 70,500 and 15, so that could be seen as support and resistance levels. So put call ratio we already discussed, and future openers also we have discussed. Bank Nifty 33,000 and 36,000 at 3,000 point ranges as of now. What the put and call writers are seeing. 32,500 and 35,000 is also seeing good amount of supports and resistance, that is puts and calls, that is written, right? So make a note of these levels, right? Watch out these levels. 16,000 seems to be good support, right? 13,500 may see a lot of resistance, right? and the second level support also says that 17,000 gap resistance, clearing above that would be also crucial, right? So let's watch out at these levels. Now sectorial watch, if you see these different sectors, right? We have the indices, you have the charts here of each of the indices, each of the sector indices, and IT sector has closed 2% up. You can see that IT is doing good, right? It has formed a bullish candle. It's kind of a no, the candlestick looks like an open is equal to low, right? That's clearly bullish. So 2% up, right? And metal has shot up 7%. Metal also is trying to break out from this consolidation zone, right? Real bullishness that you can see, very bullish candle, and it's a second bounce candle. So it's on the edge. So any rise from here above would indicate the metal is going to give big move, right? So metal and IT seem bullish. Auto sector is 9% down. Auto, right? You can see that it is fallen down. Pharma is 2.5%, right? So this levels has got some corrections that need to be done, but ignore that. We'll just analyze the charts for the moment. So these are all weekly charts, right? That percentages that is mentioned as a slight correction. So overall, you can see that Nifty IT has moved up, the metal has moved up, right? The auto has bounced up from the major support zone, right? And the movement upside has is not much. It is straight flat if you see from the close to close basis. And pharma, you can see it has made a big bullish move, and it is right now in a trending channel and facing immediate resistance. So any up move in the pharma has to be seen above this. This is a weekly candle, right? FMCG, you can see that also has bound up last week, big bounce candle, and it is going to face a resistance on the upside, right? The momentum has got into the bullish, into the sideways one. Last one is the reality. There is also a big green candle and the momentum is at support. So overall, you can see every sector last week, the IT, the metal, the pharma, auto, pharma, reality, and FMC, every sector has made a bounce up recovery that has clearly happened, right? But the pharma could not sustain that and move up. No, auto, not pharma. The rest all sectors are clear bullish candles that you can see, and all sectors are now in the weekly basis. It is all in the sideways momentum. Nothing is there in the bearish zones except auto. So auto has a flat close, although it bounced up, it is yet to recover into the. So all other sectors. So you cannot have a weekly basis pickup because uh, yeah. So metal is bullish. Just under the bullish. Metal maybe a sector that we can look out. But so business market, you have to be cautious on picking up the stocks because the market is overall in a bearish trend itself. So there is good positiveness across the sector line, and the reality is showing very good support zone 40 RSI, and then it is bouncing up. This is very clear indication of a bullishness, and also it's a cup and handle breakout, and it has bounced up from a very good support zone. And you can see FMCG also came back, except auto. Auto also bounced up, except auto, all sectors seems to be heading towards bullishness, but momentum as of now is bullish only for metal. Others are all sideways. We'll have to wait. Metal probably you can take a certain positions in the good quality stocks for a short-term swing trades. So index heavyweights, if you see, HDFC has shown a very good bounce on the supports on the weekly basis. It has almost climbed back into the sideways zone. HDFC remains in the bearish zones, but it also has shown an attempt to move upside. Reliance is showing bullishness. The candle is clearly trying to move up to the top of the channel and then break out. It is in the sideways momentum. Infosys, you can see that it is almost trying to break out from a triangle pattern. Momentum is on the edge of bullishness. Tata Consultancy also clear bullish candle. Right. Sideways momentum. HSC Bank is showing some weakness, but it is taking support at the RSI 40, and then shown in green candle, trying to attempt to break out this resistance. We'll have to watch. Kotak Mahindra is also a clear bounce up from the major support zone and momentum remains sideway. So IT sector shows clear bullishness at this, and Reliance also showing bullishness. IT stocks, Infosys and TCS showing bullishness. All other sectors are showing bounce up moves, and what we have to keep close watch is Reliance and Infosys. Right? Other sectors remain sideways. So the probability of a breakout can happen in this three. Institutional participation, if you see 24,700 crores of selling has happened from it, but look at the buying that has happened from the day, 30,000 crores. That balance and then made the indexes are all green. So net longs have moved in the derivative sector also. So institutional selling, especially from the DIS, is worrisome, and DIS are trying their best to keep the market stable. Moving on to the global markets. In the global commodities, you can see US market has given up a major support zone. So 1% to 3% of down move has happened. Right? It has given up the major support. That's serious worry. Some of the major indices, Dow and S&P 500 and Nasdaq, right? They are all given up. So this is a chart for that. So Dow Jones, you can see it's a major support zone. It has closed below there on a weekly basis. Momentum has gone to the various zones. Nasdaq, you can see that it's on the edge. It has given up the major support. It is closing towards another support that is there. Momentum has turned bearish. S&P 500 momentum to the bearish, and also it has also closed below the major support zone. So bearishness is clearly evident. 1 to 3% of down move happened last week, and next supports are seen at 32,087 kind of levels on the Dow. It's going to settle there, and similarly it's going to settle at this 12,460 levels on the Nasdaq, and also it's going to sustain at this 39,088, 3,988 on the S&P 500 is what we'll do. So downward started. Clear bearishness is shown on the US seen on the US, and same would reflect in our market also. Right? If it is heavy bearishness that is in the US market, we would follow that. The money would get pulled out completely from our market. So it's something to worry for us. But still, there is always a chance of consolidation that can happen at this point instead of a breakdown. Right? So dollar index, you can see it's closed up. Dollar is moving up. Right? It is trying to take out its 99.6 levels. Momentum is at clear bullish zones. Right? And 99.51 is where it is. Right? It's still gaining momentum. There is every chance that it will take out the next resistance that is seen at 103 or 99.66, or all that can be taken out easily looking at the momentum. The USD INR also shot up 0.5% and then settled 76.7, and the rupee is weakening every day. Rupee is weakening, that you can see. Right, USD INR chart is what you see. You can see there is a clear breakout of the channel top that has happened. It's taken out this 90s, the COVID one level of 77 kind of levels is taken out. Some selling pressure came, some intervention might have happened from the RBI side, and it has come down, but rupee has weakened to the lowest, historic lower levels. Crude oil, you can see that it has taken a cool off last week, right? What is that percentage? It's around 6% of cool off has happened. 106.5 is where it is. And remember that it had happened after taking out a 13-year high level, and then and look at the levels right now. 106.65 is also a very high crude level, and that is not good for our. There is every chance that it can further move up. Is what the momentum and the indicators are showing, right? So, and this is related to the global crisis that that's going on, the Russia-Ukraine war and all that, right? So related to that, gold, the metal sector across the world is moving up in our markets, right? Gold has also broken out because the market is crashing and oil is rising up. And so obviously the gold has to go up, and it is inches away from the 2075 kind of all-time high levels. And above that, if you do a retracement projection, not retracement, when I see extension projection, it can go up to 2175 on the upside. So this may be a sell-off or a profit booking that might have happened, but clear breakout of the cup and handle has happened from the support zone. So hedging positions and investment options all can work out with this support zone, and we can. So momentum is bullish and trend is bullish, and commodity cycle on the breakout of metal has happened. So there is every chance that it can further go up. Two stock picks for the next week. Cipla, it's a rectangular pattern consolidation that has been happening for several weeks and months, and it is clearly given a breakout. Momentum is up, trend is up, and so price patterns are showing box breakout, rectangular pattern breakout. So there is every chance that it can give a very good swing or portion trades. Metal again another pickup from the sector is bullish on the medium term, and short term also it's bullish, and weekly channels are showing that it's a breakout of a flag pattern that has happened, right? After a rounding pattern breakout has happened, a flag pattern breakout. Momentum has gone to the bullish zones. Trend is bullish on the weekly, so there's a chance that it can give very good profits on the upside for a swing or positionals, short-term positional trades on the Jindal Steel. So Jindal Steel and Cipla. Yeah, so this is a nifty option payoff chart for a strategy double diagonal, which is having a very good probability of profit of 84.5. Risk reward is one, also can be reasonable if you're targeting only for 2 or 3%, right? And a break even ranges, look at that, 15,500 and 17,340 range. Right? So it's very good range, and there's no other strategy you can give this kind of range. Is what every week I keep coming back to this strategy itself, right? There's no other strategy. So basically, we are selling the between a range for the so this next weekly expiry of 15,650 put and 17,250 call. So that's what we are basically selling. Then hedging positions we are taking from the next to next expiry. That's 24 March expiry. So that's the reason why we have this range, and then max profit and risk reward and range POP and all this we are getting because of using a current double diagonal spread. Right? So the only thing is you should not keep on waiting for the last expiry day. Exit at Wednesday itself, latest, and target only for 2 or 3%. That's it. Right? So that can consistently give you profit on the. It's fully hedged, so there's nothing to worry. You know what you're going to lose maximum, and you can also do the adjustments by rolling over the opposite side when the market is trending towards the other side. Right? For example, it's moving towards the upside, then you can roll down the put side, and then vice versa. Right? So adjustments can be done at least one adjustments more than enough for this kind of range, and it's very unlikely that the break-even ranges are going to get move out, and VIX if it is moving up, then it can be beneficial also, right? Because back a positive strategy. This is a non-directional strategy also. So this chart what you see is another view at the Nifty and the BANKNIFTY, right? Just to give you a perspective before you wind up, right? So here you can now you can see that it's 20 moving average. We are heading towards that 20 moving. We have fallen off from the 200-day moving average earlier, and the attempt is to climb over that. And we have the resistance of the gap that's immediately there. We have the resistance of the gap that is there far away, and we had slipped up to 61. We have climbed back to it. We have slipped up to 61 and climbed much above that, and so momentum was shifted. Trend is still bearish. Momentum shifted slowly into the sideways from the bearish, and the Nifty and BANKNIFTY also. So that's it. So basically, we did a very good bounce, right, from a new swing low that is made on both indices. So that is a positive thing. But remember, the market has been steadily flowing in a trend line channel. We are not broken out of the trend line channel. We are facing the trend line channel top. We are below the 200 moving average. We are at a neckline support of weekly double top. We have volatility that is breaking down in the Bollinger Bands. Right? We have Fyers that are selling crazy, like 8,000 crores per day kind of selling happened last week one day. So our own market has some bounce of positiveness that is there, but we are at a very critical point where the question is, are we able to take out this gap resistance? Are we able to break out this lower low, lower high pattern? Are we able to break out of this channel top? Right? Is BANKNIFTY going to give the support for that? Right? After making such a big fall last week. So or you can say this slight, it's a neutral view that's there for me, but slight mild bullishness chance is there because the momentum is showing that bullishness. It's taken a support at, both indices have taken a support, and then there is a chance that it can move upside. And the US markets showing the bearishness is again a worry. So every time I look at the US market charts and the news around the crude and the rupee, that is weakening every day, and the US inflation, Fed rates, Russia Ukraine war, and all this, there is no way that I can be bullish, but still I am bullish because the bounce up that has happened is very good, right? And the gaps are taken out very easily, after it has fallen down. So the market is showing some kind of strength, despite all this volatility, all this breakdown that is happening. Market is not ready to give up just like that. It is holding on. That is evident. There is buying that is happening, from the domestic institutions. Even so every dip there are people waiting there to buy and move the market to such 7%, 8% kind of up move just in a matter of 1 week, right? So it's kind of V-shaped recovery that has happened. So it's very crucial. So I may get wrong, right? This mild repair, mild, it is only mild, but I may be wrong, and it can turn to be bearish or a consolidation also. Consolidation is nothing but sideways neutral purely, but I may go wrong in this bullishness part. There could be a chance that it can face a severe resistance at this gap area, right? Severe resistance, and then it may consolidate or fall back to make another lower. It can happen, but I'm taking the view based on the momentum and the strong buying on the dips that happened last week, and little bit of war news cool off has happened, right? Little bit as compared to the initial. So market might have digested and then made this much correction, digesting all the news already, economic impact, sanctions, and all that. But still, there is uncertainty left in the market. VIX has cooled off to 25 levels from 30 levels. That is also a positive thing that I am taking. I am thinking that probably there may be a mild bullishness. There may be a chance that we can take out 70,000, right? But it is on the edge. That's why I'm putting in neutral view also along with that. But bearishness may be done with. You need to worry about bearishness again if you fell another 10% again down and then break this lower low on both indices. That's not likely to happen. Right? So gradually trades in levels 15,900 is very crucial. Right? 20 DMA is also crucial on the upside. So that is something that we have to wait and watch next week. So overall, the view is neutral to mild bullishness, right, for the next week, because we had done a V-shaped recovery and momentum is at support and all that, right? And VIX has cooled off and all this, but as I said, so our net risk always take hedge positions, right? Vertical spreads and spreads like strategies that we have used. Use that so that you risk when you don't have surprise or gap up or gap down, right? And intraday, it's very tough to trade, right, given the volatility, but in V-shaped moves can be there. So give tight stops length. So hope this helps you to frame your own view on the based on this information, and number of indicator charts that we had discussed. It will definitely help. So you should not rely on my view on the market summarized. You should also analyze all these charts that we had gone through and come to your own your own view on the market for the next week, and also your own trade plan. Right? So that's the way it is. But if it helps you in any way forming that, then consider hitting the like button and share it to your friends and colleagues so that everyone benefits, and it will be great encouragement for us. We have shamefully low of subscriptions as of now, so your help is appreciable at this stage to keep us motivated to keep continue doing this every week. Thanks for watching. Happy trading, happy learning. Bye.